I'd say we've moved more from a deflation risk to an inflation risk.
As I bring in Joe Battipaglia, we have a CPI chart. I'd like to put it on the full screen. We used it for Kudlow 101 last evening. Joe Battipaglia, please weigh in on this, because I'm starting to think there is a risk that the more the Fed, there's the CPI chart. You can see 2 years ago we had a peak. That was a peak in energy. It was about a 5% CPI. Then it declined nicely, okay? Got all the way back to 1.5% and hovered around 2%. But in recent months, it has gone back up to close to 4.5%. That is my point. And while all that's happening, as Mike Ozanian has said, these other commodities, gold is really an embarrassment. I think the dollar is really an embarrassment. And I think, Fritz Meyer, it may not be that precisely today we broke new ground against Japan, but we broke it against the euro. At some point, this is a national embarrassment. You know what, Joe Battipaglia? This is a political election, political season. We got primaries, we got national election, and people are angry at food and energy. They're angry at the hike in home heating oil. They're angry at the jump in gasoline, which some are now speculating will go to $4. I don't know if that's true. But there's a public anger out there, and many economists, I'll get your take, think if we had a stronger U.S. dollar, we wouldn't have to worry about this anger over commodities. Where do you come out on this?
Well, unfortunately, this Federal Reserve has damaged their credibility materially since 2006. And I would argue that from 2002 to 2006, they underestimated inflation by not properly looking what was happening to the housing stock, which would have prompted them to move sooner on raising rates. It also would have showed them at the tipping point of housing that there was an emerging problem. Instead, Ben Bernanke, when he came in, said there is no housing problem. There's only a lending problem for subprime mortgages. He went on to say that as the economy cools to a soft landing, the inflation goes away. So now we go through 2007. There was no soft landing. There was a hard landing. There is not an abatement in inflation. There is an increase in inflation. So now what does he do? He goes to Congress again and lays the same rap on him for the second time. Even congressmen are getting it that he doesn't get it. On top of it, he tries to be transparent by making forecasts, which he then has to revise within 3 months later. Again, it points to credibility. The dollar is showing it. Gold is showing it. And by the way, he just hasn't got control of the current situation.
All right, Fritz Meyer, with it all these threats, stocks are up 6% since January 22nd. That is still the low. It is still intact. Stocks are off 10 or 11% from the peaks last October. That's really a historically mild correction, Fritz. And I want to get into some of the leaders today. I noticed Google snapped back almost 2 percentage points after getting drubbed yesterday. Give me a little investment strategy from your bullish perspective.
Yeah, well, one reason I'm encouraged is that the leaders year to date, you'll find mostly in consumer discretionary. So home construction, for example, is a leading industry year to date. Home improvement retail, apparel and broadline retail, media broadcasting, hotels. These are consumer-related stocks that did so poorly last year, and they are leading the charge this year. That suggests to me that the market, the stock market, is doping out an improvement in this economy.
What about the big buildup, though? Since January 22nd, as Don Luskin on this program is always saying, basic materials are the leader. They're up 15%. Right. And another commodity, namely energy, is up 14%. Right. Then we do get into your retailers and consumer discretionary, but then after that you got industrials. I mean, that is kind of an inflation play, is it not?
Well, Larry, I think it's a continuation of the MEI, materials, energy, industrial leadership that we've seen in recent years, and to me, that's strictly a function of this global boom that we're in the midst of, and that hasn't slackened. And it's a realization in the stock market that demand from China and India is not going to slow down anytime soon.
Let me just get a couple of whip-arounds here. Mike Ozanian, here's one that amuses me. The housing department today raised the caps on the portfolios of Fannie Mae and Freddie Mac. The only trouble I have with that story is earlier in the morning, Fannie Mae and maybe Freddie Mac they announced very bad earnings. These guys can't manage the portfolios they have, and now the housing department and the rest of the government is going to give them bigger portfolios. Yeah, you have a problem with that? I kind of scratched my head at that.
That's a stupid idea, especially since at the same time they're beating them up to raise their capital requirements. You know, what are they going to do, double their shares outstanding? You know, there's another problem here, too, which is if you look at the cost of insuring corporate debt, we've been talking about equities, but let's look at corporate debt, which I think is also a good barometer. Since June, the cost of that insurance on good quality debt's risen 300%. So again, I think the increases in the money supply and in cutting of interest rates, I think is exacerbating the problem, not making it better. And I tie that into the same thing with Freddie Mac, I think, and Fannie Mae, that it's just going to make the problem worse. Washington beat the heck out of lenders for not lending to so-called subprime people or riskier people for years. And then when they did, now they're coming back and beating them up for making these risky loans.
What do you do here? What's your strategy? You're a bear. What's your strategy?
If I'm the Fed, my strategy is I keep rates constant, like one of your previous guests said. Or, believe it or not, I'd even possibly increase rates.
Just freeze them for 6 months.
I buy gold. I think gold's going to go up $50 between now and summer.
So you're going to hit $1,000 gold?
Yes, I do. Absolutely.
You buy the gold stocks along the way?
I like Newmont Mining, and I buy some beaten-down food companies that are getting killed from this inflation. We saw Buffett buy Kraft, a big stake of that last week. One I like is Del Monte. It's been beaten down and hasn't done well, but it has some great brands.
Joe Battipaglia, where are you now? You were adding some money to equities. You still there?
Yes, still there and creeping back in. I think the problems are deeper and last a bit longer, which means it's not a quick bounce back. So I am going to be more defensive in what I buy. And I do think that the commodity cycle is going to come to an end pretty soon because supply and demand has been overturned by all kinds of speculative and momentum trading on these commodities, having no bearing on what supply and demand looks like. Energy has been up a number of weeks in terms of availability, yet the price keeps moving higher. I don't think that's sustainable, quite frankly, Larry. So I want to be more defensive.
You get rid of the energy stocks.
I take some profits on them.
All right, that's interesting. Jerry Bowyer, we do have a regularly scheduled election in November. We have more primaries next week. Hillary versus Obama last night. Any stock market impact? What did you learn from that debate, in your judgment?
I learned that Hillary is tired and she's sort of collapsing emotionally, and it's just time to throw in the towel. It's over.
All right, so if it's over and Obama is the Democratic candidate, is there a stock market impact there?
Yes. Look, I think the stock market impact is now it's McCain. McCain is our most likely president, and I think the stock market likes that. I think it likes the clarity of a McCain presidency. I mean, what's going to happen in November, I don't know. I mean, I'm thinking a little bit about Bill Buckley, who sort of put together this coalition, and then Ronald Reagan ran it into the presidency. And I'm hoping that maybe John McCain will win one more for the skipper and keep that coalition going, and that'll be great for the country. It'll be great for the war against terrorism, and it'll be great for the stock market.
Mike Ozanian, can McCain do it?
Absolutely, he will do it, and that'll be good for the stock market. It may not take off right away, Larry, because we still have some of this Fed mess to clean up, but he's pro-tax cuts, and I think he'll actually help on the spending side in Washington.
So you fundamentally agree with Fritz Meyer. You're a bull. You're a closet bull. We just brought you out of the closet.
Hey,
here.
I'm a long-term believer in free market capitalism. I just think we're wading through a mess right now that the Fed caused.
All right. Elections can be very cleansing. I think I'll leave it on that point. Elections can be very cleansing. Fritz Meyer, Joe B., Jerry Bowyer, Mike Ozanian, thanks ever so much. Coming up, the White House says no to bailouts for banks, investors, or home buyers. We'll get the real deal from Treasury Undersecretary Robert Steele. Plus, Ben Bernanke is in denial about inflation. We'll see if former Fed bigwig Wayne Angel agrees. And I am sad to say a great American and close personal friend passed away this morning, William F. Buckley, the father of modern conservatism that made America great. We'll take a look at his life and his legacy. We have Senator Joe Lieberman, Ramesh Ponnuru of National Review, and Bill McGurn, former Bush speechwriter. We are for keeping America on the right track. Kudlow and Company, we're coming right back. God bless you, Bill Buckley.